Hi, everybody. How are you? My name is Scott Connor, like Richard just alluded to. And first of all, I'd like to congratulate everyone for being here. You made the effort to get here. You got up. You traveled. You came here. You're here to learn. Now, the first couple of speakers that have come up have been speaking about overall plans, talking things from a broad view. What I'd like to do in my short segment is share something a little bit narrower in scope. Because we're here to do what? To gain knowledge on investing and learn how to invest for a secure future. So what I want to do is present a certain investment type that might be brand new to many people in the room. As a matter of fact, just to get to know everybody a little bit better, by a show of hands, how many people have ever traded an option? Okay, be honest, raise your hand if you have. Okay, I see about 10. What does that mean? That means most people here are looking at me and wondering what an option is. Well, that's why I'm here. So, first of all, why should you listen to me? Am I an expert? What's my background? Well, let me do this. Let me share this with you for just a minute. I just moved to Singapore 6 months ago. I now live here. My wife and I moved to Singapore. We live here. But I want to show you what I've done before coming here, excuse me, for the last 25 years. I'd like to show you a picture of my old office. So let me switch to this, and you'll get an idea of what I did and what my credentials are when it comes to speaking about options. So hold on just a minute. I'm going to show you my old office. Now, this is not going to look like your average office. There it is. That's where I stood for 25 years. This is a trading pit in Chicago, United States, the largest trading pit in the world for trading options. Now, this picture was taken a little while ago in the mid-90s. That's where I stood every day. I made a living out of trading options. So what does that really mean? My actual function there was being a market maker. So I stood in that trading pit, and I bought and I sold every day. And we had hand signals that we used because it was so loud and so noisy, you had to use your hand signals to buy and sell things. Okay? So people ask me, they say, well, Scott, after 25 years in there, how did you survive? And I tell them, well, I used to be 6'8" and 260, and this is all really that's left. But to be honest with you, that was the trading pit, and that's how things worked. And options were new. People didn't know much about stock options or options on stocks and options on ETFs. They were brand new. And to actually execute a trade, you had to go through a broker, and the broker would write the ticket down. They'd give it to a runner, and he'd run out to a broker, and the broker would grab your order, and he'd start yelling and screaming, I want to buy and sell and try to get the best price for you. Well, now that's all changed. Now you get software from your online broker, whoever that is, and now you can actually execute the trade yourself and eliminate most of this process, and your order can be filled in a fraction of a second. All right? So that's what options are, and that's my background. That's where I spent my life. So the focus of what we'll talk about here in my short period is I'd like to share with you what I learned standing in that pit for 25 years. Now, during that time, who were the successful traders? And what I mean by successful is who were the people who stayed with me 25 years? Because remember, when I was in that trading pit, for the majority of time, I did not have a salary, no paycheck. I lived on how profitable I was or how successful I was as an options trader. Everything I bought and sold went into my account. So over long periods of time, I needed to be successful if I wanted to have income. Does that make sense to everybody? Okay? So that gives you a little idea of what I did for many, many years. So what I'd like to do is share with you what I learned in those 25 years and what those points and how they will help you become a better and more effective trader and investor, opening a door to options, something the majority of the room's never heard of before. So I'm with Thinkorswim, and we have a software, trading software, online software. You can actually learn to trade options, not so much to us, but you can use our software to go ahead and execute that. And I'll talk about that just as I finish. But you have many, many educational opportunities, including SIAS and many other cases that are cited here to learn more about options trading. But let's start from the beginning. Since the majority of the room does not know what an option is, let's start, and I'll give you a very example. Options are simple. contrary to maybe what you believe or what you've heard, options are very simple. And let me give you an example. Someone explained it to me once, and this was very easy for me to understand. They said an option, Scott, is just like a coupon that you would use in the store to purchase something for a fixed price. I said, okay. So if I take a coupon to the store, I give them the coupon, I get to buy that product for a certain price that's written on the coupon. Now, what happens to the coupon if I don't use it after 2 or 3 weeks? Right, it has an expiration date. I can't use it anymore. Well, think about an option as the same thing for a stock. It's a coupon that gives you the right to buy 100 shares of stock at a certain price, and it expires in maybe 30 days or 60 days or 90 days. Is that simple so far? Okay? Now, the only difference between the coupon that you'd take to a store and the coupon you would use to buy stock is the coupon that you use to buy stock, you can buy in and sell at any time. So if I buy one option, it's called a call option, if I buy that one option, I now have, if you will, a coupon that gives me the right to buy 100 shares of stock at a fixed price. Now, I can buy that stock anytime I want until that coupon or option expires. Does that make sense? So let's say I have the option to buy, let's pick a stock, Baidu. And Baidu's trading around $90 a share. So let's say I buy one coupon or one option that gives me the right to buy 100 shares of Baidu at $90 a share. That's its current price. Now, I can use that option anytime I want in the next 30 days to actually exercise my right and buy 100 shares of Baidu at $90, because that's what my coupon says. I get to buy it at $90. Now, let me ask you a question. What if Baidu in the next 2 weeks goes from 90 to 95? Can I still use my coupon to buy it at 90? Absolutely. Yes, you're absolutely right. Of course, that's the whole point. So I can take my coupon on any time, buy my 100 shares for $90 a share, and if it's trading at 95, well, sure, I could just sell it at 95 and make my profit, right? So that's how simply it works. So when you hear people talking about options, don't get confused, don't get intimidated. They're very simple. Just think about the coupon example, and you'll understand exactly how that works. Now, there's another coupon that we won't go into now, but it's called a put, and that actually gives you the right to sell 100 shares. So if we thought a stock was going down, we could actually buy a put, and that gives us the right to sell Baidu at 90, and if Baidu drops to 80, we're okay because we get to still sell it at 90. So that would be, for example, a protective strategy using options. But the concept itself is very simple. Now, so some of you I can see are starting to think. I'm looking around, I see people, their minds are turning now, and they're thinking, okay, well, what's the difference between buying the stock itself and then using the option? Well, let's think about it for a second. Let's go back to our example of 100 shares of Baidu. Now, if I buy 100 shares of Baidu, the actual stock or the counter itself, how much would I need in my account to buy 100 shares of Baidu? It's trading at $90 a share. How much do I need in my account? Does anybody know? Well, what's 100 shares times 90? $9,000, right. So I would need $9,000 to buy 100 shares of Baidu. Now, let's look at the other example. Let's look at the option. What if I used an option that gives me the right to buy the same 100 shares at $90 a share? How much would I need to buy that option that gives me the right to buy 100 shares? Anybody have a guess? I'm going to guess it might be $1.50, $2, something like that, times 100, so maybe about $200. So wait a minute. If I buy the 100 shares myself, I need $9,000. If I buy the coupon, I need $200, and that will let me buy the same $9,000 worth of stock, and all I'm putting out of my pocket is $200 to buy the option. Now, of course, the option only has an expiration date, so it's only good for a certain period of time. But what if there were at a point in time where you felt a stock was going to be moving up or down and didn't have the sufficient capital to buy the stock itself? Well, if I buy the option for $200, then I now own, or I have the right to own 100 shares of Baidu at 90. And if Baidu goes up to 100, I can take that option I paid $2 for, I can sell it for 10. I never even bought the stock. Okay, so now now I see eyes starting to open a little bit. So that just gives you a basic idea of what options are. Now, at the same time, you're probably thinking, well, why have I never heard of options? Well, they started in the US. I showed you the picture back in the 90s when they really became popular. They're starting to become very popular here as well. Thinkorswim came to Singapore just about 2 years ago. We started opening accounts about a year and a half ago, and we're seeing options, interest in options, and options trading is the fastest growing portion of our business right now, just like it's been for many years in the US. Okay? So it is a new product to Singapore, and again, that's why I'm here. So now you have an idea how an option works. What's interesting about that is if we go back to our example of buying 100 shares of Baidu, it cost me about $9,000. How much am I risking on buying that 100 shares? Remember, I had to put $9,000 down to buy it. How much am I risking? Anybody? How about all 9,000? Now, the stock's not going to go to zero, but it could, right? Now, what about if I buy the option? Now, remember that option we paid about $200 for? It gives me the right to buy the same 100 shares at $90. How much am I risking on that option that I purchased? $200. That's it. Risking 9,000, risking 200. Now, we know every investment has risk. Every investment has risk. So what options do is they open the door for you to start using lower amounts of money, lowering your amounts of risk, and learning about different option strategies. So what I want to share with you now is in my 30 years, or 25 years on the trading floor, people always ask me and say, Scott, what are some of the things you've learned that you can share with us if we're interested in learning about options? I said, yes, there are 3 things. So let's go through them. And if you have a pen and paper, you can go ahead and write the first one down. Now, the first one is high probability trading. One of the key points that options afford to people who are learning about them. Now, what do I mean by high probability trading? Well, let's think about this together. I'm about to say something that might shock a few people, and some people might not believe it. But go through this exercise with me. If I buy 100 shares of stock, I don't care what stock it is. Let's say I buy 100 shares of stock right now. I go on the market, I buy 100 shares. What are the odds that my stock will go up? Anybody? Well, what are the odds my stock will go down? Anybody? Well, let's back up a second. What if I took a coin and flipped it? What are the odds it will land on heads? Anybody? 50, exactly. You're all saying it together. 50-50, right? Now, that's what's called probability. And that's, you can't fight it. There's nothing we can do about probability. It's a law that exists, a mathematical law of probability. Anybody here ever took accounting knows exactly what that's all about. The laws of probability. So, yes, I'm going to do research. I'm going to have things that are going to try to help me determine the direction that I think a stock is going to go. But in reality, when I buy that stock, I have a 50-50 proposition. It can only go up and it can only go down. There's only 2 things that stock can do. Now, you're going to hear other people say otherwise. They're going to tell you that they know where a stock is going, or they can show you how the direction of the stock is going and provide statistics and everything and charts and everything. That's absolutely true, and many times that does help. But it doesn't change the fact that from a probability standpoint, it's a 50-50 proposition. Now, here's what options can do. They open another door. They say, well, let's say you have a particular opinion on a stock, and you think that that stock is, in fact, going up. All right, you could buy the stock, and you've got a 50-50 chance. We know that. But here's what options do. Options afford you the possibility of saying, I think the stock is going to go up. So here's our stock right now at $90. I think it's going to go up. I'm not exactly sure when, but I think it's going to be fairly soon, the next month or 3 months. And it's at $90. Now, the professional traders down here, here's how we looked at it. We said, yes, the stock can go up or down, but we don't say, well, the stock could go up or just down. We fine-tuned it a little bit. We said a stock can do 5 things. Let's go through them together. Number 1, it can go up a lot. That would be Baidu going from 90 to 100. Now, I'm talking about just a 30-day period. Baidu could go up a little, maybe $3 or $4 or $5 during that period. Baidu could stay right where it is, right in the middle. Maybe up a little bit, up or down $1, just stay right around where it is. Baidu could also go down a little bit, $3 or $4 or $5, right? And then Baidu could also go down a lot. Now, there's 5 possible outcomes there. Not 50-50. There's 5 possible. Now, if let's say we liked Baidu. We've done the research. We've gotten educated. We've used CS and other educational opportunities to learn more about a stock, and we've found one that we like fundamentally and on charts and everything else. So now we have a bias, a direction. Now, instead of just doing the 50-50 proposition and buying it, let's look at what the professional traders did. And here's how we did it. We said, okay, we think Baidu is going up, and we'd like it if it goes up a lot, but let's put a strategy on where if Baidu goes up a lot, or Baidu goes up a little, or Baidu stays right where it is, or even if Baidu goes down, and we're wrong, goes down $3 or $4 in the next 30 days, we still make money. The only way that we'll lose is this last one, if Baidu goes down a lot. Did everybody follow me on that? So what we're doing now, instead of saying the 50-50 proposition, we're going to use an option strategy that says that what we're going to do now is say that if it goes up a lot, we're fine, we'll make money on that trade, up a little, unchanged, or even if we're wrong to $2 or $3, we're still going to make money. If it drops more than that, we have the potential to lose. But we're entering this trade because we believe the stock is going higher, okay? So that's how professional market makers would approach trades. They used high probability. They opened the door that options give you in terms of using probability on your side, okay? So that was a very simple example on Baidu. There are many other strategies that you can use with options, for stocks moving up and down. And one of the beauty about options that many people don't know is that there are option strategies available for you to learn about where if a stock is going up or down or even sideways, there are option strategies that can be profitable in all 3 of those environments. Now, you must learn about them. Being a professional trader for many years, I know the risks involved when you don't learn about options. There are option strategies that are dangerous. I don't even use them myself. And that gets to number 2. Number 1, high probability trading. That was the example of the Baidu trade, where we're going to do a trade where, let's go back to our Baidu trade. So of those 5 possibilities, we made money in the first, the second, the third, and the fourth. We could only lose in the 5th, which is Baidu being down a lot. What percentage is that? 1 in 5. What percent is that? Any math experts here? It's 20%, exactly. So we start the Baidu trade off where we make money in this scenario, that scenario, this scenario, and that scenario. That's 80% of the probable outcomes, right? We make money in all those. The only one we lose is when Baidu goes down. And the probability on that, if we're going to talk about probability, 20%. Now, does 20% sound better than 50? Well, of course. If you want 50%, there's a beautiful building right across the Marina Bay that will give you something like that, and they'll also offer you free drinks while you're doing it. All right? But that's not interesting to me. As a professional trader who had to live off of his trading and his investments, particularly on the trading side, I had to live on higher probabilities. Okay? I hate gambling. You will never see me in a casino. I can't do it. Because I know what the odds are. When I walk in there, they're going to win. The best shot I have in roulette is about 48%. That's it. So if the longer I play, they will win. There's no question. I won't go there. Why would I go there if I know I could do options trading and start every trade with an 80% probability of me being right? Okay? So that's the door that options up. Okay. So number 1, we talked about the high probability trade. How about number 2? What's the second thing I learned that is very important for the people who stay with me all 25 years? And that is defined risk. And you can write that down right now, too. Defined risk. What does that mean, defined risk? Well, options have a way. There are different, many strategies. But the only ones that I will use and the professional traders use are option strategies that had defined risk. And it's pretty simple. Defined risk simply means that no matter what happens to your underlying stock, there is a maximum loss you can take on that trade, and there will also be a maximum amount of gain. Okay? But as long as that maximum loss is within your comfort zone and you can sleep at night, that's where you want to be. Because what I found on the trading floor for the 25 years is the people who no longer stayed with me when I was down there were people who took or put on options positions that had what we call undefined risk. Now, undefined risk simply means that if a stock starts going against your options position, the further it goes, the bigger your losses become. I don't like that. I don't do that. I would not recommend anybody here does that. So defined risk, very important. So that's number 2. Now, and why is defined risk important? Anybody have any ideas? Well, you talk to any investment advisor anywhere in the world, and they'll say one of the key elements of you being successful is having defined risk, knowing your risk tolerance, knowing your comfort zone. And what I saw on my trading floor is the traders who didn't stay with me very long because they used undefined risk strategies and ended up getting carried out of the trading pit, because what happens is at some point, when the losses become too big, you have to say stop. I can't lose any more. So you end up making what we call an emotional or irrational decision. Now, oftentimes, unfortunately, that turns out to be the worst price. Has anyone ever done that? Said, well, let's say I bought a stock. Well, it's gone down a little bit, but don't worry. It'll go back up. I'll sell it. And then it goes lower. And you think, oh, well, now it'll probably still go up. I'll still sell it lower. And then it goes lower. Now you're saying, well, I can't sell it now because it can't go any lower than that. Well, guess what? It goes lower. Okay? And that's when the person with undefined risk gets out. All right? And guess what happens after that? Okay? So if you never put yourself in a position where you have so much risk that you're out of your comfort zone and you're forced to make that kind of decision, you'll never have to worry about it. You'll be able to sleep at night. And that's why I like options so much, because there are option strategies, the majority of which, if you learn how to trade options, define risk. You can sleep at night. You know exactly what your maximum loss is, and you know exactly what your maximum gains can be. All right, hold on just a second. I need to put in I lost my, okay, bear with me just a second. Now, let's start thinking about the third topic. And what I call these are my 3 criteria to options trading. So the first one, let's review. First one was high probability options trading. Okay, that's one. Second one was having defined risk in your trading plan, so we can continue over the long period. What's the third one? And this, to me, is what separates public traders, people like yourselves, who are learning about individual investors, who are learning about options, and the professional traders in my trading pit. Okay? Hold on just a second. Okay, it doesn't want to let me back in. Let me give it one more time. There we go. So for those who came in, that's the old trading pit. Now, let's get to number 3, and the final criteria for you to take with you. Because what I want today, what I hope today, is that I'm not going to bombard you with lots of information. I want to open your eyes to what options are, number 1. And I'd like you to leave today just remembering 3 things. That's it. Now, the path you take to learn about options trading is up to you. The broker you choose to actually implement options trading and investing is up to you. I'm with Thinkorswim, and of course, I'll give you a little incentive to look at us when we wrap up here. But what's the third thing I'd like you to take with you when you leave today? All right? And that's this last topic. What also is unique to options that most investors, when they start trading, don't really understand? And it is what we call time decay. All right? And you can write that one down too. Time decay. And this, for most professional traders, is where the main source of their income came. Because we talked about what's the difference between buying the stock itself and then buying the option. Well, there are several differences. We know that the option runs out of time. And the stock, once you buy it, you can hold it forever. We also know that a stock itself will pay dividends, and options don't do that. But if we think a stock is going to be moving in a short period of time, options obviously could make sense. But what is it? What is one characteristic about options that I want to leave with you, which is the final point of what we'll talk about here today? And that is, since an option has an expiration date, just like the coupon we were talking about, that coupon that gives me the right to buy 100 shares, since it has an expiration date, if the stock doesn't move at all, let's just say it stays right where it is for the next 30 days, what happens to my option Well, over time, as it gets closer and closer and closer to its expiration date, it starts losing its value. Remember, we said we had to pay $2 for that option? Well, if the stock never moves for the next 30 days, that option that's $2 will actually go down and lose all of its value on the final day. Now, an easy image to put in your mind is that, okay, it's like an ice cube moving closer and closer and closer to the fire. And when it gets right next to the fire, it melts, it's gone. We call that expiring worthless. That means the stock never did what we thought it was going to do, okay? And the option lost that value of time until the final day and it ran out, all right? Now, if the stock moves up, fantastic. Fantastic, so will the value your option. And you can sell your option anytime. But we have to always look at what's the downside. What could possibly happen? What if the stock doesn't move at all, right? So yes, we could lose the value of the option. Now, what professional traders is, they knew that. Now, irregardless of which way the stock moves, up or down, the option itself, since it's running out of time, will lose value. Now, that's the one thing I learned on my 25 years down here that happened without exception. Without exception. We cannot stop the march of time. Therefore, we cannot stop options from losing their value over time. So what the professional traders did is they became adept at learning option strategies that met the three criteria we talked about: high probability, defined risk, and the third one, that time decay that we were talking about. They learned how to use that to their advantage. Now, the person who buys the option that runs out of time, it decays against him. He loses much of that value. But what if you were the person that did most of your strategies by selling options with high probability and defined risk? Well, now you have high probability, defined risk, so you know the maximum gain and loss so you can sleep at night. And then number three, now you have that time decay working for you. Now, a lot of people are looking at me right now like deer in the headlights, because they're saying, okay, Scott, I think I understand what you're saying, but it's a little bit beyond what I'm doing. Well, don't worry. If that's happening to you right now, don't worry. If you're brand new to options, these are the kinds of things that you'll want to learn more about, obviously, okay? But those three keys: high probability, which options open the door for. Number two, defined risk. Defined risk strategy so you can sleep at night. Number three, learning about time decay and how options lose value over time. Now, if I start off by selling options and they lose value over time, that's great, because I can buy them back later at a lower price and lock my profit in that way. Okay, so there are different ways to approach that. Okay, so how are we doing for time? Just a quick time check. We okay? All right, okay. Let me just wrap up a couple things real quick then. So again, I'm with Thinkorswim. I showed a slide just a little bit earlier of who we are. We're fairly new to Singapore. Like I said, I moved here now. And for those who are learning about options, if you spend the time and get some education about options, you'll obviously need a brokerage platform so you can execute options trades. So when I left the trading floor, there's a gentleman right up here. His name is Tom. He's right there, and he's the one who founded Thinkorswim in 1999, 2000, right around 2000. He left the trading floor and could not find any software anywhere that was sufficient for doing options trading. So he hired developers and built one. That's how Thinkorswim got started. Now it's available to the public worldwide. And again, just in Singapore in the last year and a half. So if you've not heard of Thinkorswim yet, it's because we're brand new. So it's a brand new concept here. What I'd like to do in wrapping up is just make a very special offer to everyone. Since we are brand new, we have a booth on the 7th floor, right outside. So stop by our booth. If you register with us here today, which doesn't mean you have to fund an account or anything, just register with us. We'll give you a certificate that you can take with you. And when you register with us, you'll get our software. We'll give you $100,000 of paper money in your software, and you can start learning about option strategy. You can actually execute them with our paper money. So if you get educated, start learning about options through CS and other different opportunities you have, you can start practicing them on our paper money. We give you $100,000. There's no charge. It's absolutely free. So stop by our booth, grab a certificate, and just register. Go home, download our software, have fun, learn about options. Start to learn a little bit about options. Start very, very small, simple strategies, okay? and you're on your road to learning more, okay? If you came here to learn how to be a better investor and a better trader, this would be a great first step. Now, I know options are new, so if you'll be talking to your friends about options, they won't know what you're talking about. It's brand new to Singapore, all right? Here's the last thing I'll say. When you come to our booth, and you go ahead and register with us, we'll give you a certificate. And the incentive is that if you do open an account, a live account, we'll give you your first 10 trades absolutely free. $250 value. We'll just give it to you free. And that's if you open a live account, all right? Now, you can obviously choose any broker you like. I'm not up here to sell Thinkorswim to you. That's not what I'm here for. I'm here to share what I learned as a professional trader for 25 years. I use the Thinkorswim software, but you can choose any broker you'd like. Absolutely. But it is your prerogative to choose a broker that's going to offer you the best options trading tools you have at the best commission rate possible. That's your job. Your job is to find the best broker with the best commissions for you, all right? Now, again, I told you we'll give you 10 free trades, and here's the last thing I'll leave you with. An options trade with a broker, how much do you think you have to pay to do an options trade? It can be anywhere from $5 to $10 to $30. What we're going to do here for anybody who does come to our booth and register, we're going to let you make an options trade. Let's say you just bought one option. Your total charge will be $1.50. $1.50. Okay, so that just gives you a little idea of what it means to actually trade one option. Okay, don't think it's something that's going to cost me hundreds of dollars. It might at another broker, but not at Thinkorswim. All right. So let me wrap it up then. If we're close enough to our time, are we right there? Okay, fantastic. Again, folks, thank you very much for coming. I know that you've given up a lot of your time to come learn something. Hopefully, what you did, I opened the door for you. You understand what options are now, at least the concept of what one is. I will be here the rest of the weekend, right up on the 7th floor of our booth. Please come by, see myself, or Chris Brankin, our CEO, or any of our other support staff. If you have any questions, if you'd like to ask me more about options, please, that's why I'm here. I'm going to be here for the next day and a half to answer your questions. So please stop by our booth, and don't hesitate. Pick up our certificate, and hopefully you'll learn a little bit more about options trading. All right? Well, listen, folks, thank you very much for your time, and good luck in trading going forward. All right? Thank you very much.